Bitcoin's fire, US debt, and the last safe haven. Welcome to FluxFolio Finance, where we decode the quiet tremors moving the world economy before the surface breaks. If you're new here, make sure to subscribe. If you're already part of this community, thank you. And if this video leaves you with something to think about, share it, comment below, and hit the like button. It helps this truth echo farther than you know. Now, settle in. Because this isn't just about gold. It's about silence. It's about memory. It's about what endures. Let's begin with what the world isn't talking about. Bitcoin has just surged past $100,000. Stocks are leaping like there's no gravity. China has pumped in $300 billion. The US has signed a zero tariff pact with the UK. Risk is roaring. Confidence is back. But while the world throws its money at momentum, something ancient has gone quiet. Gold has dropped. On May 9, 2025, the price of gold fell to $3,311 an ounce. Not a crash. Not a rally. Just a subtle slip, like a breath held underwater. To some, it meant nothing. But to those who remember, gold doesn't move without meaning. It helps to remember what gold is. Gold isn't a number on a screen. It's not a speculative bet. It's not a company, or a trend, or a platform. Gold is weight. Gold is time. Gold is what remains when other things stop working. Long before banks, before bonds, before Bitcoin, there were coins hammered in the ancient kingdom of Lydia, 6 centuries before Christ. Gold and silver blended into a universal language of trust. That trust lived through Rome, through the Renaissance, through war, through empire. And in 1944, as the world healed from global destruction, that trust became law. They called it Bretton Woods. 44 nations gathered in a quiet New Hampshire resort and agreed to a system where every currency would peg itself to the US dollar, and the dollar, in turn, would be pegged to gold. $35 an ounce. No exceptions. No paper games. The US became the world's anchor. And gold became the invisible ceiling above everything. This was not just financial architecture. This was civilization welded together with metal. But over time, America printed. The Vietnam War drained coffers. Inflation crept in. France and others began redeeming dollars for gold. And in 1971, President Richard Nixon, sweating under the studio lights, told the world that convertibility was over. He ended gold backing with a stroke of televised policy. The Nixon Shock didn't just change currency. It untethered reality. From that moment, money became belief. And gold became memory. But memory does not forget. In 2008, the cracks began to show again. Banks were bloated. Derivatives metastasized. The economy was smiling on the surface and rotting underneath. And quietly, gold began to rise, up 50% in 9 months, touching $1,011 an ounce. It was the one thing people trusted when they didn't know who to believe. Then came Lehman. Then came panic. Then came something strange. Gold began to fall. Why? Not because it lost value. But because fear became so profound, institutions had to sell their safety. Wall Street, hedge funds, banks, brokers, they needed cash. They needed liquidity. And gold was the only asset they could offload instantly. ETFs like SPDR gold shares were dumped. Physical bars were liquidated. Goldman Sachs, just months earlier, had labeled gold overbought. Then came their clients. Then came their shorts. Gold plunged to under $700 by November 2008. It hadn't failed. It had been sacrificed. But then, the world turned on the printing press. The Federal Reserve bought everything in sight. K became the new religion. And gold, patiently, began to rise again, touching $1,900 just a few years later. It had not vanished. It had waited. Now it's 2025. The United States holds $36 trillion in debt. $3 trillion of that comes due this year. And the buyers are walking away. Japan is selling. China is selling. The EU is watching. The 10-year Treasury yield has risen from 3.5% to 4.59%. The bond market is trembling. The dollar, once beyond question, is now being questioned in silence. Meanwhile, the Fed is stuck. Inflation is still at 2.8%. The Mar-a-Lago Accord has unleashed tariffs, and the global economy is fragmenting. And yet, amid all of this, Bitcoin rises. And gold falls. So now we ask the question everyone's asking: why own gold when Bitcoin exists? It's a fair question. Bitcoin is digital scarcity. It is decentralized. It is elegant. It is fast. It is loved by a generation that doesn't trust banks. But it is not physical. It is not inert. It is not universal. Gold does not need electricity. Gold does not rely on code. Gold has no CEO, no ledger, no validator nodes. When fear rises, Bitcoin spikes. But when collapse begins, true collapse, with liquidity vanishing and silence spreading, what gets sold first? The speculative flame? Or the metal with 5,000 years of survival behind it? Central banks around the world hold over 36,000 tons of gold. That's $3.6 trillion. China bought over 250 tons in the past 2 years. Russia has over 2,300 tons. The BRICS nations now talk about gold-backed trade. This is not ancient history. This is now. Even US institutions, BlackRock, State Street, Vanguard, are quietly building positions through ETFs and vault custody. You don't do that for fun. You do that for protection. Gold is more than metal. It is leverage. It is collateral for billion-dollar loans at JP Morgan. It is the basis of swap lines at the People's Bank of China. It is accepted in Zurich, priced in Shanghai, withdrawn from ATMs in Dubai. In India, it is pawned for family survival. In Turkey, it is hoarded in household safes. Gold is not outdated. It is unplugged. And in a world that is increasingly digital, increasingly unstable, increasingly stretched, being unplugged may be its greatest feature. So here's the question again: should you buy gold? Not for a rally. Not for a breakout. But for gravity. For the anchor at the bottom of your portfolio, beneath the volatility, beneath the noise, beneath the headlines. Because when systems shake, and they always do, gold doesn't shout. It just stands. This has been FluxFolio Finance. If this stirred something in you, hit that like button. Share this video with someone riding the wave a little too comfortably. Subscribe for more truths hidden beneath the surface. And tell us in the comments, are you betting on Bitcoin? Or are you quietly buying gold? Thanks for watching. And stay ready.